Hey guys, welcome back to another video. This is all about how to make fuck you money with liquidity trading. I've been trading for 8 years now, and I've found a method or created a method which essentially allows me to spot where the liquidity lies in the markets. I'm not just talking about equal highs, equal lows, highs and lows, significant highs and lows, stuff like this. What I'm speaking about is the true liquidity, where traders are getting in and out of their trades. When you can picture that everyone's going long in this direction right now, you can go short, take all their liquidity out and make a ton of money. I'm going to show you exactly how I do this. And stay around to the end of the video and I'm actually going to show you an example of how this works in real time with a trade that we actually caught live today with the community. So without further ado, let's get into it. Now, this is you right now as a trader. You're overwhelmed, there's too much information. You struggle with risk management and discipline. And you're doing a lot of emotional trading, things like FOMO, panicking, and overtrading. These things will kill you as a trader. After you watch this video, I'm going to teach you how to master one A+ setup with a consistent win rate. Be calm and confident when trading and keep your emotions under control. This is super, super important. And make sure that losses don't shake you and you're able to bounce back easily after you have a losing streak. And this is coming from someone who's been trading for 8 years and managed to make over $2 million just from trading. But let me tell you something. At one point in time, I was in your position as well. I went from a broke construction worker with $250,000 in trading losses, putting myself into 6 figures of debt that I had to try to pay back. And then once I got profitable, I then became a multi-millionaire trader. I've got time, location, and financial freedom. And I'll tell you one thing, it feels amazing. Remember guys, you only have to perfect this strategy once, just once, and you'll get consistent with it. You're set to make your first $10,000 to $20,000 per month consistently. And I genuinely don't think there's another video that's going to be as valuable as this one. So get your pens and paper out. You will need to write or type this down somewhere. Pay super close attention to what I'm about to tell you. Let's talk about the liquidity trap. And what is the liquidity trap? It is retail traders. So what we do using the liquidity trap method is we're baiting out or finding out where the retail traders are getting trapped, where their stop losses are, where their money sits. And when we can identify that, we can make a lot of money in the markets. That's how we make money, by betting it against the majority of traders, essentially betting that everyone else is going to lose. But first, we need to understand basic liquidity concepts so you can identify where these retail traders are actually getting trapped so you can capitalize on them. First is liquidity. Now, we need to identify where the stop losses of traders are. So for example, in a consolidation period, it goes without saying, stop losses of people going short, wanting the market to go down, is above price. Stop losses of people going long, buying, hoping that the price goes up, is below price action. So what price will often do is stop out the short traders, stop out the long traders, and then continue in its direction that it wanted to go. Next is equal highs and lows. Of course, you guys have probably learned this one before. When you have price returning to a similar area as before, creating equal highs, we have more or less a resistance level as well, but we have a liquidity build up. So what price will often want to do is go and take that liquidity out. Same thing with equal lows. We have 1 touch, 2 touch, 3 touch on these equal lows. Price will want to eventually go and take that liquidity out. And it's the same thing with swing highs and lows, because we know there's a lot of money that sits below a high, above a high, and below a low in price action. So if we can identify these swing highs and lows, we can find high probability scenarios where price will go and actually hunt them. Next, we have support and resistance levels. Now, support is where price comes back into this example here. Price creates a support level, pushes up, returns into that support level, and then pushes up again. Price then creates a new support where traders are expecting price to react from and go up again. Look, this might happen a few times, but more often than not, support is going to be taken out. Now, support needs to react sometimes, needs to show us that it works, or show support and resistance traders that this works. But for us, we can identify support and find, for example, equal lows sitting at a support. That's an extra confirmation that that support, for example, this one here, after price makes a high, will get taken out. And we can actually take that trade alongside that liquidity. The next thing to understand is inducements. Now, inducements are an area in the market that forces traders to enter. It forces out liquidity, and us, we take advantage of that. So let's have a look at this price action here. We have price creating equal highs, like we just explained. 1, 2, 3. Then we get an inducement of the highs. This inducement of the highs creates a bullish range. What happens next is we have a demand zone here, but look what we have at the demand, like I've just explained to you. Equal lows, 1, 2, 3. What does price do next? It goes and breaks all of that, actually creates a lower low. So you can see that this is all a manipulation in the market. If we can identify that, we can find high probability trades. Next is the liquidity sweep. So once retail is in the trade, institutions will push price slightly past the inducement level. This is a sweep. Now think about this. High, higher low, higher high, higher low, demand level, demand zone. We also have a significant low, and then price goes to take that low out. That's the sweep of liquidity. Now, what's confusing about that to retail traders is that's a bearish breaker structure right here, creating a bearish trading range from high to low. So this is a supply zone where traders are looking to short from. This also sits at a resistance zone. So what often happens here is price will do a manipulation at this supply and then push past and induce that high again, or sweep liquidity once more, leaving everyone scratching their heads. So what this does is this triggers stop losses, which are market orders. Breakout traders' entries are also triggered. Now, coming back to here, when price breaks a low, right there, breakout traders enter sell. Their stop losses will sit above here. Stop loss. That's when price will reverse and go the opposite direction. It's the same thing at previous highs. This is why price will take liquidity, because breakout traders are entering a trade on a candle closure above a high. They're expecting price to just continue to the upside. This doesn't always happen. So if we can identify this, we can see where the breakout traders are getting in. It actually gives us another confirmation to get into a trade. And all this creates the liquidity pool institutions need. Perfect. Now, I'm going to show you a real-time example of how this looks on the charts. So this is a 15-minute time frame on gold. We have a big bearish breaker structure to the downside with a range from this high to this low, with a big supply zone here as well, where price will be looking to come into and eventually take that out, induce that high. Why would we induce that high? Resistance level. So that's what price has eventually gone and done. But I'm going to speak about this entry here, which we actually caught in our live session. It shows the manipulation perfectly, so you're going to understand it. So the first thing we can notice is that price is starting to make its way up, making higher highs and higher lows, higher high, higher low, higher high. So price is actually creating also a minor resistance level just below this big supply zone. Now we can also note that we are in that 61.8 to 78.6 Fibonacci zone. So we have a lot of traders shorting. So what does price do to manipulate traders? Goes and does a bearish breaker structure. That bearish breaker structure means that the internal or the external structure from this high to this low and the internal are lining up. So this area becomes a very strong sell zone. If we pull out our fib, we can also see that we have an internal Fibonacci zone here, which is actually where we entered our short, because everyone's looking to short in this zone because fib traders are shorting, market structure traders are shorting, and SMC, ICT traders are also shorting based on this. So how do we get into a buy? Why would we go the opposite way? Well, we have the resistance level, the supply zone, the fib zone, the market structure zone. Everyone is shorting in this one area. So what is the manipulation that we need to see? For us, and this was one that we caught on a live session with the team today, for us, it was actually price coming in and breaking this small support zone. Again, had a bit of a fake out move showing it might be retracing came back down, which we often see, and then price started to retrace, came up quite aggressively into this support. And because it was coming up quite aggressively, and we were coming in 40 minutes into my 1 hour New York trading session, we saw price come in, and then this was the key, this bearish engulfing candle. The bearish engulfing candle meant we could get into a buy. And again, I just covered these lows and a bit lower, just give it 40 pips breathing room. I go for a 1 to 2 trade, but this is when we noticed that every trader was going short. Your smart money concepts, your ICT, your fib traders, your market structure traders, your support and resistance traders, because we're tapping into a resistance level one more time. And obviously your supply and demand traders. So if I'm noticing that and I see this reaction, manipulating everyone to go short, I simply enter a buy, give the trade room to breathe, and aimed for a 1 to 2. We went up and we shot up to a 1 to 2 in about 10 minutes. Now, this was a live trade that was caught with the community. And it was a beautiful one as well. But this is just a good example of when you spot the manipulation, when you see everyone's going one direction, it makes it so easy to go the opposite way and take that liquidity out. And price moves with purpose. You can see, let's trap everyone in here and let's just move with purpose. Take them all out. Take them all out. And obviously we're on the opposite side of that. So we're making money on that move. But overall, guys, this was a great example of how this strategy plays out to a T. And guys, if you want more information, check the description down below. First link in the description. You can find out a lot more information about how I trade. And if you are interested, you can join my mentorship community. But if not, you're just enjoying this content, which is totally fine as well. I'm making this completely free to give you guys a ton of value. Make sure you like, comment, and subscribe, and I'll keep these coming for you. Thank you.